I'm Frank Darras, America's top insurance attorney. Today we're going to talk about filing an insurance claim against another company. When you file an insurance claim, it can either be a first-party claim or a third-party claim. A first-party claim is when you buy the insurance from your own insurance company. We all buy auto insurance. That's first-party coverage. Third-party coverage is we get hit by somebody else and they've got their own insurance. A third-party claim is when you file against the insurance policy that covers that at-fault person or driver. For example, you might file a claim against the insurance company of another driver in a car accident, or you get injured at someone's home. You file a third-party claim against that homeowner's insurance. A third-party claim or claimant can recover medical expenses, lost wages, and sometimes additional money for pain and suffering or punitive damages. This can also be called a liability claim. The first step is to figure out if you're in a no-fault state if you're involved in a car accident. If you are, you can't file a third-party claim because you've got no fault. You pay for your own insurance, and it pays no matter who's at fault. If you don't live in a no-fault state, and the accident was at least partially the other driver's fault, you're eligible to file a claim, a third-party claim, against the other driver's insurance company. If you choose to file that third-party claim, make sure you have strong supporting evidence that the accident was not your fault. After all, you're not their customer, and you haven't paid a dime in premiums for that third party's insurance. Filing a claim against another insurance company and receiving payment is much slower than when filing with your own insurance company. It can sometimes be easier to do what we call subrogate the loss. You settle with your own carrier first and let them go after the other driver's carrier. For instance, you've got property damage. You settle with your carrier, they go after the other guy to collect the money. To subrogate, you file a claim against your own policy, you pay the deductible, and allow your insurance to pay you the money due. If the carrier feels the other party's at fault, they may request you subrogate or assign your rights under your insurance policy so they can try and collect the money on your behalf. If they succeed, and they usually do, they'll get the money paid back to you and usually be able to refund your deductible. Be careful when you speak with an adjuster from the other insurance company. They frequently try to elicit a statement from you to minimize your damages and ultimately to deny your claim. Don't give any statements or recorded testimony without getting some top insurance assistance. Those details can be found by the adjuster elsewhere, such as an accident report, or they can talk to witnesses that were at the scene. Be very careful before you give a recorded statement. After receiving payment from the other insurance company, they're going to ask you to sign a release and a waiver. This releases your right to come back and sue that insurance company for more money at a later time, even if you learn new information about your injury or your damages. Don't sign a release unless you've had it carefully reviewed by a top insurance lawyer. If you've sustained anything more than a very minor injury or very minor property damage, it's always a good idea to have a top insurance lawyer review the claim before you make any fatal mistakes. I'm Frank Darras, founding partner of Darras Law in Ontario, California.